This is Al Brooks, and today is Saturday, January 26th, 2013, and I am recording a blog on Apple. Back in September on 2012, I posted this chart on my brookspriceaction.com website, and it illustrated a few things. At the time, there was a very strong trend up in Apple, and the market was in a strong channel at this point. And if you draw a trend channel line across the tops, the market then broke out of the top of the bull channel, and typically about a third or less of the time when that happens, you get follow through, and this is an example of that. Usually, maybe 2/3 of the time, 70% of the time, if the market breaks out of the top of a bull channel or out of the bottom of a bear channel, it reverses within about 5 bars or so. When I'm drawing trend lines, when I'm drawing trend channel lines for the top of a channel, I initially draw them across swing highs, and when I no longer have swing highs to choose from, I then look for parallels based upon trend lines. So if I take this trend line across the lows and create a parallel, and then anchor it to a swing high that would contain all the prices, and it contained all these prices, I then look to see what happens when the market gets back up to test that channel. And right here, when it got there, it had a bear reversal bar, and then went sideways to down for a few bars, and then it went up again here on September 18th. And on this day, it broke above the top of that channel. And that prompted me to post this chart on my other website, the brookspriceaction.com website. And at the time, I said that I thought there was a 70% probability that this bull breakout of a bull channel would fail, and that the market would then correct down for about 10 bars, 2 legs, TBTL, and poke below the bottom of the channel, through the bottom of the channel, as a minimum target. And when I'm looking for corrections after failed bull breakouts of bull channels or failed bear breakouts of bear channels, as a guideline, I expect the market to correct for about 10 bars and 2 legs. And 10 bars on the monthly chart is about a year. So at the time, I posted this comment that I thought it would correct for about a year. And today, obviously, things are different. This is the chart as of Friday's close, January 25th, and you can see that the prior chart had a bull trend bar here, but when that bar closed at the end of the month, it became a doji reversal bar. And to me, that is a sell signal. Sell what? Certainly sell out of longs, and certainly consider selling and taking shorts. For me, if I were to take a short in a strong bull trend like this, I would only do it in the form of options, buying puts or put spreads. At the time, one of the things that prompted me to put this chart up was on options action. Carter Worth said that his work showed that Apple was going up to 800 over the next month or so. And at the time, I said I disagreed with it because of this monthly channel. And I bring this up because he did not look at the monthly chart, and he did not construct this channel. And it's a good illustration of how, when you're looking at channel lines, you have to consider more than just the tops of swing highs. When the market is beyond any channel drawn across swing highs, the market's always in a channel. And when you can no longer use swing highs to draw channel lines, you have to consider creating a parallel based upon the trend line at the bottom of the channel. Obviously, I could have used these highs, but they would have come through over here. So the market's well above that. Now, what kind of reversal is this? It's obviously a buy climax. We have a buy climax here, and then we have a consecutive buy climax here, and we have a potential final flag here. Is it a major trend reversal? On the monthly chart, I would not call it a major trend reversal because we just corrected down for 2 months, 2 bars. I'd rather have it correct for 5 or 10 bars. The final rally is 4 bars. I'd rather have it correct up for at least 5 to 10 bars. But in any case, it's at least a final flag reversal. The market tested the top of the channel. Remember, this line is a parallel of this line, and I anchored it to this high. The market went up to that line and reversed. It went up again a second time and reversed. So twice it tried to break out of the top of this channel and failed, and that makes it a stronger sell signal. What do we do from here? We still have another week left of the month. Can this bar close back above the bottom of the channel? And is that the start of a reversal up? I don't think so. I mean, it can certainly close above the bottom of the channel and back into the channel. But remember, I'm looking for 10 bars, 2 legs sideways to down as a minimum. We've only had 4 bars, so I want to see more bars. And we've only had 1 leg, so I want to see a second leg. And I think Apple probably, I've been saying this since back here, that Apple would become the new Sony. Sony is a wonderful company. Back in the 80s, if any of you is old enough, you'll remember that they had Trinitron televisions, which were the state-of-the-art televisions, and they had a VCR recording device, which was really good, and they invented the Sony Walkman, which was the precursor of the Apple iPod. And today, Sony is still a very good company, but it's no longer the great innovator compared to its peers that it once was. And I think Apple is in a similar situation. It was a great innovator. It had a string of incredible products, and now the market is saying it's becoming just another company. We have big up, big down. That means big confusion, and it usually means sideways for a long time. And I think Apple will go sideways for years. How many years? 2, 3, 5, 10, a long, long time. It could be any of that. And we don't have a bottom yet, but at some point it'll get overdone on the downside and it'll have a very sharp rally. But that'll mark the end of the first leg down. I think it'll then have at least a second leg down and probably go sideways for a long, long time. Here's Cisco. This is an example of a similar thing. Very strong rally. There's a bull channel, bull breakout, and then I don't have the bottom of the channel drawn in, but it fell through the bottom of the channel and had an incredible pullback to about 80%. It's already had 2 legs down. Here's the first leg, a pullback, and a second leg, and it's been sideways now for 13 years. I don't know that Apple will go sideways for 13 years, but this is an example of what is possible. This is what I expect Apple to do. I do expect it to have big swings up and down for a long, long time, and I don't think it's going to be going back up to the highs. Here's the weekly chart of Apple. Again, you can see there's a trend line along the bottom. I created a parallel and dragged it up to a prior high right there, and you can see the market tested it exactly at this point and turned down. It had a push here and another push up here and turned down twice. Here's the first turn down and went below a prior low. Here's the second one, and now it's plunging below the bottom of the channel. It could find support at the bottom of this trading range, the bottom of this trading range. There's a gap here between this high and that low, so to me that's an obvious target around 300. Nobody knows yet where the final bottom will be, but I think we're going lower than where we are now. Here's the daily chart. It's Apple again. On the daily chart, we have a bull trend, a trend line break, and a higher high major trend reversal. Weekly chart's also a higher high major trend reversal. And inside of this major trend reversal, there's a nested wedge. 1 push up, 2 pushes up, 3 pushes up, and then there's a smaller one inside here. 1 push up here, 2 pushes there, 3 there. Now, where do I think Apple will go from here? It tried to form either a triangle bottom or a wedge bottom. 1 push here, 2 pushes here, 3 pushes here, bull breakout. You can call it a triangle, or you can call it a wedge, doesn't matter. And the breakout failed and we broke to the downside. Typically, when you have a bottom pattern that fails, the market goes down for about a measured move, which would be right here. And this also, right here, is a leg 1, leg 2 measured move. So if we say this is the first leg down, and then the market rallied, and the measured move projection for the second leg would be here, also around 400. You can also view it as a head and shoulders top, left shoulder, head, and right shoulder. And the projection for that, the head is up here at 700, the neckline is in the neighborhood of 500, so that's 200 points, $200, and the projection down from there would be down here around 300 off the bottom of the chart. I want to say one other thing about this daily chart. On this bear breakout bar here, on Fast Money, they had Tom DeMark on as a guest. Who's a pretty well-known cycles guy, and he said that the low was in on Apple. And if you just look at this red bar, does that look like a low? To me, it looks like a bear breakout of a bottom, and probably the start of much further down. Anyway, they put him on as an expert to say that the low is in. And the very next day, I went on and said that I just don't think the low is in. I think 70% chance we have to go lower, because that monthly trend line was down here in the 470 area, and this is turning up from 485 or 486. So it's a good example of, when you put somebody on television, you immediately give the guy a lot of credibility. And he talked definitively. They said, oh, he picked the top up here. Well, September 18th was right here, so that chart that I posted in my room was right here. He said the top was somewhere in here, and because he picked the top, he must be right about picking the bottom. They didn't ask him, Tom, what percentage probability do you attach to your system? He has a system where he counts the number of bars up and the number of bars down. So we have a close here, a higher close, a higher close. The next higher close is here, here, and then there, and then here. Once it hits 13, he says the market turns. And he uses daily charts, weekly charts. He may also use monthly charts. And on the way down, he somehow calculated a 13 here. So we had a lower close here, a second one here, third one here, a fourth one here. This might be lower, 5th and 6th, and then maybe 7th, 8th, I don't know. Anyway, he comes up with a 13. He came up with a 13 here, and he decided that maybe started, I don't know how he did it, but he came up with 13 and said that this was the low. Anytime somebody says something definitive on television, I immediately dismiss them. I want to know percentages. I want to know targets. I want to know stops, and they never give that on television. But in any case, this is a good example of them putting an expert on, talking definitively. And I'm sure people watching television that day bought Apple, and then when Apple opened down $50 lower here, they took a huge loss. So where do I think Apple will go? We have a bear breakout of a bottoming pattern. I don't think this is the first leg down. The move from here to here is contained in a fairly tight channel, and it's probably the first of 2 legs down. So Apple will go down, complete a first leg. It's possible the first leg is over right now. It'll have a pullback and probably have a second leg down. How sure am I? 2 chances out of 3. 1 chance out of 3, I'm wrong. And I think Apple will, on the basis of the daily chart, get down to the 400 area. And then it'll probably start a huge trading range. Will it go all up to 600 in the next few years? It might. Will it get down to 300 in the next few years? It might. But somewhere between 300 and 600, I expect it'll stay in that range for probably at least a couple of years, and maybe much longer. And that's all I have to say. And again, today's Saturday, January 26, 2013. Thank you.